Jeff Killian for the Inside Technician in the Maverick Live Trading Room. We have a real-time S&P E-mini trade in progress. You're looking at a 1-minute chart. This trade was called by our smart money trading methodology here the preferred entry. The preferred entry on this trade is right here in the previous 1-minute bar at this point, right here at 1756.50. We'll mark that. Right here at 1756.50, again at 9:15 a.m., October 31st, 2013. Again, today is October 31st, 2013, 9:15 a.m. Eastern Standard. 9:15 is the time and the stamp, 1756.50, confirmed. We have several price profit targets to the downside. Laid out, longer term price profit target is 1754 at the support level as outlined by these prices broadcasted out into the future. We have a good 15-minute chart set up. Before we get into that, let's just copy and raise this up here. Nixing out this center point of this pivot point low and a blow off to the downside, 1755.25. That would be 1755.25. Right here. The volume that came in right here at 9:14, 2,377 contracts on the probe for the low close was the determining factor for the preferred level to enter this trade. "15-minute chart setup is good. SMI clear to be short. Before the level was ever broken here on the 15-minute chart, clear level laid out here, and then again here, and a possible floor at this point. 755.25, 753.75. Again, MACD just crossed that bar in process. The upper region clear to be short. You're looking at a real-time trade identified by our smart money trading methodology. The Maverick Live Trading Room will be open mid-January 2014 for worldwide subscribers. Jeff Killian, Chief Market Strategist for the Inside Technician, administering the room on my watch. EMA is crossed back here, a third of the distance of the bar. At the trend line violation on check and money flow, clear to be short. And again here on money flow. Managing the trade to the downside. Gap was filled here at 1759. 15-minute chart blow off to the upside. Prices traded down. Weakness, weakness. Finally got through what was an earlier entry by myself in here and out here on this volume. Price profit target remains 1755.25. This is an S&P 500 E-mini futures real-time trade identified. By our methodology here at the Inside Technician. Near month contract traded 12/2013. Managing the trade in real time. Everything stays on schedule and as organized. This room will be open somewhat 18 hours a day. Fully transparent environment, very comprehensive educational material. As you can see, we've just walked through a fairly good showing of it. And we have 4 different administrators to provide you with the coverage that you need in order to trade the overnight or the open equity session. All administrators are fully trained in expert market timing, including the daily analysis, integrated right into real time. When we have high probability trade setups to the downside or the upside, factoring in the daily analysis, daily levels, 15-minute levels, 1-minute levels, from the macro, drilling it right down to precision entry and exits on the 1-minute charts. Bias on a daily basis, since the large sell-off yesterday, is to the downside. We have long-term Dow, S&P, equities, and E-mini futures just formed, hot off the press, brand new negative divergences. Suggesting a potential turnaround based on a market top at this time. Just revert back to 15-minute charts. The trend line violation, continued momentum to the downside. Leaves us clear to stay short. Here MACD is fired. Disparity between MACD and the signal line continues to widen. Clear to stay. Correction. SMI indicator. Disparity widens. Clear to stay short. And the MACD had just fired within the previous 15-minute bar, getting through the level at 1566.75, which was once previous resistance here at this point by these prices, to take a quick long trade here and turn right back around. Indicators at the overbought territory, MACD crossing in order to allow for a better setup than the previous very short-lived long trade. Still made money there, and then be short. Targets again 1755.25 to the downside and 1753.75. Managing the trade in real time. $17.55.25 initial price profit target. Secondary price profit target is $17.53.75 right here. Hello. 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 Again, managing trade to the downside here. 1755.25 initial price profit target. Secondary is 1753.75. Hey, real-time trade in progress. Essentially, link if you're interested, you can go to the room. I'm recording this as we speak. Back to the MACD, clear to stay short. 9:25, the market will be open shortly. Expect a lot of volume to come in. Now, the scenarios are that we could have a shakeout to the upside and then a continued down movement, or prices with the volume that will come in is sure to come in on the market opening will drive these prices down. At this point, we've chosen to take the trade short in anticipation of the prices continuing to the downside. Now, if prices trade up, we'll get out, even preempt the stop and be right back in below this level right here. For a new area to be short. That price point would be 1756.25. So we're prepared for anything here at this moment in order to take advantage of a better setup to the short side than the long side for today's trading. It is 9:26 a.m. Price is trading up marginally, which appears to be a shakeout to the upside right now before prices will turn back around. For those scalpers on the end here, for the best fill would be out already with a loss of a quarter, possibly a half a point at best, waiting to see if the market turns right back around, and then we'll trade sharply through the 1756.25 level. We'll change that value for you right now so you can see this. The market will open in 7, 6, 5, 4, 3, 2, 1. Now 2 minutes left and counting down at 57, 56. Playing this either way right now. The preferred end was here at this point at 1756.50, right at this point. Again, at 9:15 a.m. with the idea that prices would trade sharply down even before the market open, maybe get through here at market open and continue to trade down. What appears to be happening at this point is that we have the shakeout before the market opens, and this is scenario number 2, where the short setup is still a higher probability move than the long setup. The prices have shaken out here and will turn back around. As the market opens in another minute and 11 seconds, prices will trade sharply down here with the accumulated volume that will come in. Price private targets to the downside are 1755.25 and 1754 flat right here. SMI is clear to be short. MACD clear to be short. EMAs have already crossed, clear to be short. Trendline violation on MFI clear to be short. More momentum to the downside on the longer-term shaken money flow after the trendline violation came in on the previous 15-minute bar. Market will open in 25 seconds. Now again, for those of you who are scalpers in at 9:15 a.m., would have been right out with a quarter, half a point loss, looking for prices to turn back around and get through the new support level at 1756.25. And a quarter of a point below that will be the preferred entry at 1756. Market is open. Again, prepared to wait as prices will trade up for the shakeout and turn back around to complete the higher probability trade setup getting through 1756.25 to the downside. Those of you who trade real-time know very well that in many cases it's best to wait on the sidelines until clarity, brevity has been established and an objective entry can be made. This is Jeff Killian, Chief Market Strategist for the Inside Technician, and we are demonstrating a real-time setup looking for a trade after the shakeout this morning to the downside. Here we have 15-minute chart setup, price trading up marginally. With a large sell-off that came yesterday, the bias is still to the short side. And although prices are trading up, at this time we feel this can be a shakeout, and we will look for prices to settle back down and then eventually trade through a new level that's been established here at 1756.25, get through that point and continue to trade down to some of the price profit targets we have established right here. Waiting for this trade to come to us. Time is 9:31 a.m. Now moving into 9:32, brand new bar. Preferred entry on the trade is now 1756 even. An initial preferred entry was outlined by this bar right here at either the price point of 1756.25. 1756.50 would have been a later fill, under the pretense that the price would continue to trade down. The scalpers who may have been in at this point right here before the market opened would have been out with a quarter, max half a point loss at this point right here when prices traded back up. Now that was before market open. Again, understanding that prices may shake out as soon as market opens until it finds an objective direction. We're waiting to see on a high probability trade setup to the downside if prices will shake out here and then turn around and trade to the downside and get through 1756.25 to get a proposed in at 1756. And so we're waiting for this trade to come to us. And if it does come to us, then another preferred entry call will be made at this point to get to 1755.25 and 1754. Okay, Jeff Killian, Chief Market Strategist, back, reporting live E-mini trade. We're looking at 1 minute chart. Penetration that we're waiting for below 1756.25 has happened. The shakeout, as we predicted, was nothing more than that. If prices turn right back around. Now here, we're not moving down sharply yet, but if we refer back to the 15-minute chart, SMI is clear. Never look back to stay on the buy side, to be short. MACD had crossed. No reason to think any differently at this point. EMA has crossed way back here on the bar that crossed you, 1756.75. To be short. Trendline violation on MFI. Now back up. Not uncommon in real-time 15-minute bar. And here we are with the MFI. Interestingly enough, kind of a repeat of what happened yesterday. Down, up, a lot of volatility. The market could go either way. We're prepared to be more short than long at this point because of the higher probability set up to the downside. Price is trading mark to the market 1756 and 25. It's low in a 1 minute chart for the past 3 sessions, 1755 and 75. Time is now 9:37 a.m., 30 seconds left in the current 1 minute bar. Historically speaking, the market could wait as long as 9:45 to 10 o'clock to make a smart money determination whether prices will stabilize at this point, move up, or as we still stand in the anticipated direction of a short trade versus any other direction at this moment, the high probability setup across the board on our 15-minute indicators, where clear to stay the bias to the short side. What's changed is shaken money flow has now dropped way down to a much lower level. Now this may vary as the 15-minute bar in process changes due to the 1 minute bars that are pushing it. The conclusion at the end of the 15-minute bar, when this closes out at 6 and now 25 seconds, will act as an additional confirmation to the weight of that continued bias to the downside or not. Volume's light so far in the open as compared to yesterday's action here. This, at this point, coming in for 9:45 at the close of that bar. We'll see how prices continue in the anticipated directions compared to the volume that comes in. In my opinion, this is nothing more than a lot of noise right here, a lot of high-frequency trading. No definitive decision made yet. Now, because of the extended hold time on this trade due to the volatility, we'll be cutting in and out of the recordings in order to cut down the time if this gets uploaded to YouTube. Okay, so today's example of this trade was a high probability setup to the downside. There were several areas that were an objective conclusion to be in. Scalpers would have been out a quarter of a point above this level at the 9:15 a.m. bar, and no trade here at all, waiting for this volatility in the form of what is now an official shakeout to the upside or potential movement that will continue to the upside. No trade would have been recommended for a preferred entry at around 1756 or 1755.75 because the prices did not turn back around. This, in essence, is risk control and a prime example of how to stay away from what would have turned out to be a losing trade. This is Jeff Killian for the Maverick Trading Room, wrapping up a trade on risk control today to help everyone, all subscribers, stay the course for only the best of the best trades.